Morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 7th of May, and Brent crude oil is trading up over 1% this morning in Asian trade at $62.85 on Brent after yet another brief moment dipping below $60 on Brent at the end of last week. Earlier in this week, it has recovered and sort of moving back to that comfortable spot in the low to mid 60s rather than below 60. It would appear on Brent. That is the story. Let's kick off this morning with Alan Gelder, a Senior Vice President, Refining Chemicals and Oil Markets at Wood Mackenzie. Alan, is the bearish worst of the year over for the oil markets, which is we seem to have bedded in OPEC plus supply increases? The Trump tariff bark is off to a whimper in Geneva, sitting down with the Chinese to sort of say all is forgiven, and conflicts in Europe and Middle East rage on. So ultimately, the bearish worst for the year on oil markets is over. Your thoughts?
Sean, you've laid out a very good argument as to why that is the case, but we're not quite, in a sense, the uncertainty bands are huge, really. Will there be, how will the trade talks in Switzerland go? Because there are talks about potentially setting up talks, so you may get a bit of a negative reaction there. We've got Trump in the Middle East next week. Will that mean maximum pressure gets applied to Iran or not? So there's lots of things that are very, very uncertain over the coming weeks and months, which could mean that actually that sunny uplands that you painted might disappear further off into the distance, given events. How does the world react to what happened last night with India and Pakistan? Will there be calm after that storm, or will the
yet
storm
another
continue to
war,
rage?
yet another conflict to bearish the market? Sarah Akbar, Chairperson and CEO of OilServe Kuwait and Non-Executive Director at Petrofac. Sarah, one of the things we've been trying to sort of get a understanding of in order to sort of then get a sense of maybe where it'll go next is, why is OPEC plus Saudi Arabia increasing oil supply into a global economy that's weakening, where demand appears to be dropping and revising downward? What are your thoughts on the OPEC plus decision to raise supply, accelerate the raise in supply? Of course, Kuwait is part of that.
Yes, correct. Good morning, Sean. It's
Good
nice
morning.
to be back.
Absolutely. Lovely to have you.
Yep. So, I think the level of oil price that the US wants or demands is like $55. And to get to 55, we need to add more production into the market. So I think it's not driven by increase or growth in demand. I don't know if it is market share. There is huge pressure within OPEC to get their market share and to produce. Some of the OPEC members have been cheating. They've been adding more production to the market. But I don't think that's the driver. The main driver here is trying to achieve the target price that's set or that is wished by the US. And preparation for next week, probably Trump's meeting in the region. So, logically speaking, there is no reason to put more oil into the market when you have the oil price, the trajectory is going down, and there is really no seen growth looking at the status of the world and the world economy.
So you're not buying the argument, or that seems to be the dominant reason, at least that's being announced in the media, that it's because Saudi Arabia and wants to police those countries within OPEC plus that are not living up to their quotas, that it's a punishment exercise for those countries. That's not the reason. You think it's more about the geopolitical win of pleasing America?
This is not how OPEC operates. They don't punish people within OPEC, and they don't. It's a collective, and they act in the best interest of all. But what is obvious now is that this direction is driven by geopolitical demands for lower oil price. Because if you think about it, even when after the 100 days, there was few institutions that made surveys into the market, the US, to see how people were thinking about the 100 days. And, the second most heard comment was, oh, we are happy because the oil prices, the gas prices are down in the US, and this is what Trump promised, and he's achieved it. So that's a big driver, and I believe that's the main element here.
Jamal Qureshi, Managing Director, Analysis and Strategy at Petrologistics, based in Norway. Jamal, your thoughts on the thesis that the bearish worst of the year is over because of these reasons, that OPEC plus strategy is now known and the market's sort of bedded that in. Trump's bark on tariffs is essentially over, despite the dancing, and we wait for the fat lady to sing, so to speak, as the phrase goes. But ultimately, the 100 days is over. Trump is moving towards becoming a lame duck. Your thoughts on that thesis?
No, to keep it very simple.
Okay, next.
Exactly. The administration is just getting started, right? And they're prepared to sort of run their full agenda. The issue is more, what is the agenda? Because you have multiple warring factions on the right trying to pull different things off. If we talk about Middle East conflict and war, again, you have multiple. You've got the MAGA trend. You've got sort of more neocon trends. You've got all of these trends and advisors. And again, whoever gets the presidency or on any given day is likely to win. So there's that. Tariffs, very similar. He got started. He put out his firing shots. There is, a long-term vision among some within the administration, right, for reindustrialization. But this is all being done in a way that it's not going to achieve anything in that direction in the short term, at least nothing that would outweigh the drawbacks. So we've got this strong support that we've seen at about $60 on a technical basis. But OPEC has decided, whatever reason you want to call it, to press supply up. Demand, recession, these things are on the horizon. US is going to drag down global demand growth as a result of that. The lower prices, fine. That's one injection in the arm for demand, but it in no way outweighs all the other problems that are hanging over the market.
But if you take that, I mean, just the kind of Trump, obviously slightly facetious, but nonetheless looking into it, the lame duck scenario. The 100 days is over. Labor Day is in 2 weeks' time. Labor Day weekend, 2-3 weeks' time in the US, essentially when everybody goes on holidays, and the sort of transformation of America and its sort of tariff and so forth seems to be over. And now the move into international is all about wars. How can that be bearish? How can there be a downward trend? Where would the downward draft that we haven't seen yet come to oil markets, that the bearish worst is over? Where would it come from? Where is worse coming from?
Well, as far as the administration and the politics, 100 days doesn't mean anything to these guys, right? And a congressional...
Summer holidays does, though.
Okay, for a congressional holiday, but a lot of
Trump likes his golf, all of that stuff.
He likes his golf, but he also likes his executive orders. And those do not take a break for any congressional break or even holidays, right? Many times we've seen they like to come out with these shock items when people are looking the other way. So, there's a great ability to keep driving economic growth down here. And
like reopening the prison in San Francisco, all of this sort of distracting noise, meaningless.
But keep in mind, too, the trajectory of where OPEC is going on this, too. It's about unwinding the entire set of supply restrictions. And there's multiple purposes behind that, but there's a lot more to go on that volumetrically.
And what do you think is the driving North Star on
it? I think it is multiple factors. I think what Sarah said is absolutely correct in terms of trying to please the U.S. administration, no doubt about that. I think as well, it is about trying to push compliance, but that's a multi-stage process. Part of it is actually, okay, they're going to bring people in a bit in the sense that their percentage compliance will look better, and maybe that makes it a bit easier to kind of rearrange the political deal behind it. The UAE in particular comes out of this with a more manageable baseline to work around. Kazakhstan may, but this is a stick as well as a carrot, because of what this will do to the price, and therefore the renegotiation of at least the politics, maybe the numbers behind OPEC Plus cooperation.
Alan, just drilling into it a little bit in terms of the recent, I mean, counterintuitive things that we're seeing, as the big one being OPEC Plus increasing supply into a weak market. They've done that at other times in the history, and the price collapse has resulted. So it's not unfamiliar territory, and the outcome is quite sort of predictable in a way, although we seem to have found a floor at 60. But then we got the Saudis coming out yesterday or the day before and increasing the price to Asia on its official selling price. Your thoughts of those two things coexisting? Where do you see logic, rationale in that?
It's an interesting one, because it typically those things have tended to go in concert together. So you get the news, the leak, we're pushing more volumes in, we'd like more volumes to be taken, and so the OSPs are reduced to increase the incentiveness for the refiners to produce that. So you've got coherence in message, and that hasn't appeared yet. That's where it's very unusual. Is it a sign? Yes, we want more. Yes, we want more volumes, but actually, the money is quite important. And trying to just maximize the revenue, assess the value in terms of how those OSP work. We look in terms of sort of refining values, and medium sour crudes are sort of relatively attractive. So if you just follow that refining value aspect, those crudes are always a little bit. So those crudes are more valuable. So the OSPs have arguably just reflected the value in medium crude rather than trying to promote a big push of additional volume into the market. So this is where it's probably a little bit nuanced, and short-term tactics against a longer-term aspiration around market share and driving the market lower are slightly in conflict. Normally they're all tuned and lined up, but we don't see that this time. So that's helping
and
to add
how
to
vulnerable or sensitive would Asian refiners be at the moment regarding that kind of price increase? Are the margins good? Are they had a tough year?
Q1 margins were much better than market expectation. That's because there was lots and lots of outages. So things were nominally a little bit better. But now we've got sort of refineries coming back from maintenance. We're kind of expecting this summer to not be particularly strong, despite the fact we're going into US driving season. We've got a reasonable increase in crude runs in sort of June time, but we're not really expecting much of a bump in margins because we've got effectively weakness in China. And to go to the point we're talking about previously, despite all these tariffs being imposed, we've not really seen the impact of these tariffs hasn't been reflected into the real historical backwards looking data yet. So refining margins for us this year, we think, are probably going to be bouncing around floor levels again. And so refiners will be sensitive, and they're also very sensitive given the volatility that we're seeing. So they're going to try and really minimize their long-term exposure, because you just don't know where things are going to go.
Sarah, we've seen in the US, as you mentioned yourself, the general narrative very well receiving. Every president, every US administration wants a lower gasoline price at the pump, but also the impact we're seeing on shale oil production at below $60 on WTI. Now it has been below 60 for some time now. We're starting to see US oil production being shut in, and we're going to see a year, most forecasting now, that prices or production won't just plateau in the US this year, it'll actually decline under these lower price structures. What impact will the lower price structures have on the Gulf? I know we have a lower production cost here, but nonetheless, there is a lot of money being spent on increasing capacity. So where does that impact, do you think, if we're now in a cycle in which we're going to have lower price for a while? You're obviously in the oil services business.
Well, typically the oil service business is the one that suffers most because they are the last to recover as well. So I think the oil service sector has not even recovered from the last shock. So, but anyhow, so in the GCC and mostly, in the oil exporting countries, they cannot afford to change their programs on the short term. They always work on the longer term. So that's why whatever commitments they have made already trying to develop production will continue to happen. It's not going to slow down. There are a few countries that you will see the shock will drive them into lower investment. For example, Iraq. I don't think Iraq can continue with the current program they have if they don't get additional share from OPEC or some kind of better pricing. They are fully 100% almost reliant on the oil revenue for everything else in the country, and so they cannot do that and develop oil. So there is no cushion in Iraq. But typically in the other GCC countries, you will see that you will not see much change in the programs. They will just continue as normal. As you are absolutely correct, in the US, there are two things. The people are happy because of the gas price, but then the companies, the independents are very, very unhappy because their margins is really squeezed, and a lot of them, they will not make the kind of profits they were thinking about. They completely supported the administration and Trump, and I think they would want to see a better oil price than 55. So the next 2 weeks, I think many things will change. For example, if Iran comes into, there is an agreement with Iran, this will drive the oil prices even lower. If there is an agreement with China, this will mean that there will be a better economic development worldwide, which drives the prices up. And typically, when you have this type of environment, people try to store oil, and you will see that many of these reserves will be filled now under these oil prices. So these are the kind of elements that, if you put them together, will give you a more stabilized vision. But like I said, I think in this kind of world that we are living in, you plan by the day. You don't know what will happen tomorrow morning, and genuinely, you do it day by day.
Jamal, on that point, the structure of the oil market is starting to shift. The OPEC Plus, obviously, for many years now, have been very successful in keeping this market in backwardation. But we're seeing the rise of contango in the out months, and I wanted to get your thoughts on where do you think the structure, if this strategy of OPEC Plus continues, i.e., adding supply into a market in which there isn't the demand, where do you think we go from a market structure point of view?
Yeah, well, I don't think there's any ability to avoid consistent contango, at least for a period, until there's an actual production shift, whether on non-OPEC or OPEC. So that's part of what follows a weak market at this point. And flat price and structure over time, even though there's a lot of short-term divergence, they certainly tend to broadly over time follow each other. So especially if we see flat price break its 60 floor, that could speed that process up. But fundamentally, physically, it'll be driving there.
And just on that, where that intersects, I mean, this market structure and this OPEC Plus supply being a sort of a bearish sentiment, the geopolitics, the sort of Trump efforts to resolve the war in Ukraine seems to be nowhere closer. The war, the sort of barbaric attacks on Gaza continue unrelenting. And now we have a conflict emerging perhaps between India and Pakistan, at least on some level, which is always sort of bubbling away a bit like a volcano there that always sort of hovers but never really blows up, inshallah. But your thoughts on those conflicts, the Trump sort of efforts to resolve any of them, and where they intersect and vis-a-vis the sort of old classic geopolitical premium in the oil price.
Yeah, I mean, these are sclerotic efforts, if I use that word right. Um, we have seen how I think this is something we see on the geopolitical side and the economic side, right? We need to separate sort of the rhetoric from the real on the ground impact. What we've seen when we talk about these geopolitical situations around the wars is that there's a managed aspect to it. There's a baked in set of assumptions to most of them. So if we look, for example, at the Houthis in the Red Sea, right? The market made its adjustments, and there's a little bit of a semi-detente happening here, right? The Houthis have long said this is about Gaza. Fine, we'll cut a deal with the US. Trump's willing to cut a deal at a point if the reality of something larger doesn't come through. And I think we'll see similar things in Iran. Iran has obviously mended a lot of relationships in the Gulf, not totally by any means, but there's more of a détente and ability to work together there. And if we talk about India and Pakistan, I mean, there's no way to predict how something like this rolls out, but I would expect, that's going to be a demand side impact far more than a supply side impact.
Let's go to the survey question, which is sort of capturing this idea of the bearish is over. The bearish worst of year is over for oil markets as OPEC plus supply priced in, Trump tariff bark ending in a whimper, and conflicts in Europe and Middle East rage on. Agree or disagree with this thesis? The essence of that. Alan, looking forward into this obviously this week in the immediate sense, we have the Fed meeting in the US this week today to come out with what the market expects to be no change, even though we were previously on a trend line for declining Fed rates before this sort of trade war started. Where do you think that goes? Does the oil markets even care about that at the moment?
It always cares about it, Sean, because it's always looking for signals as to how the economy's going. Essentially, the Fed easing would imply that the US economy is struggling, but you've seen the early signals, the drop in container traffic, but we're not seeing those things kind of ripple through. So I think pause will just enable the market to think about other things. If there is a change, then is the Fed reducing because it's fearing the economic impact and the shock, and it would probably take that quite negatively. So I think if there's no change, probably we move on to whatever is the next prevailing news headline without potentially too much disruption. But we'll find out in the coming days. I mean, our outlook is the US growth is going to slow. US driving season will not be as strong because ultimately prices are going to increase, but there's lots of exemptions to tariffs. So probably there's going to be much more emphasis around the news flow of what happens in Switzerland with preparatory talks between the US and China, and then really what's happening next week when Trump is in the Middle East meeting all the GCC members. That's probably going to carry far more weight in terms of how the market responds to the signals that come out.
Sarah, just picking up on that, Trump's coming to the region at a time when things in Gaza really couldn't be worse than the 2.5 years of this thing. It's in the worst it's ever been. We're on the borderline of famine now, as well as, I mean, just all of it is beyond comprehension. But so he's arriving in a region in which that is there. I'm just wondering, what do you think is the main point of this visit? What should we expect comes out of it? Does anything change? Does he? Where do you think it goes?
I mean, that's the toughest question. Come on, Sean. I
Yeah,
mean,
yeah.
yeah.
I mean, from the
And
point of
I mean,
view of what does the region get out of a visit from the president, it does seem like he's coming at a time when, on the positive side, that all of the countries around the Gulf seem to be on one side, in the sense that nobody's looking for the US to start any further conflicts in the region.
yes. So we hope that some conflicts will be put to bed. For example, this issue with Iran, that's a big thing for the Gulf, for example, because we really don't want to see a war with Iran. It will be destructive to everyone here. So that's one important factor in this. So if we can deter this in any way, then I think at the same time, we'd like, I mean, the Gulf would like to see a friendly, contained Iran as well, because we don't want these proxy wars everywhere and so on. So that will be a big thing, a big part of the discussion. And the other part is, I think, what Trump is hoping is that to push this agenda of neutralizing the relationships with Israel. But with Gaza being there in this condition, that's a very big no-no to this discussion. But even during all his speeches about the region, changing Gaza, buying Gaza, I don't know what he wants to do with Gaza. So there will be some pressure on this relation, Iraq and the Arab GCC, Israeli relationships. And there might be some compromise for Gaza that gives lives to Gaza and to the Gazan people. And if the GCC, all of them play their cards right and then properly, then I think that this kind of relationships, to 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 give Gaza some kind of status, keep the Palestinian people, give them life for some kind of diplomatic relationship or what kind of relationship with Israel. That would be part of the discussion. And I think the third part is how much money he can extract from this region for whatever projects in the US. And they were talking about few trillions here and there. So that is the third element into this. And, they already committed, I think the Saudis want to invest about $1 trillion, and then, the Qataris, the Kuwaitis, the UAEs. So, I mean, few trillions to be invested in the US in various manufacturing and data and technology and whatever. So I think that will be his highlight. Oh, we got this much money from the region to be invested in the US. And that's what he will be bragging about.
That will be his win. Well, we'll wait and see. Jamal, just to wrap up with the news yesterday that, again, in this context of weaker oil pricing, Norway's parliament sort of instructed the government to launch some new concession areas for oil and gas exploration. What is that a big story? Is that not? I mean, obviously Norway, the biggest oil producer in Europe outside of Russia, more capacity to come from there?
Yeah, for sure. I mean, this is the internal political debate within Norway, right? The green country producing all the black oil. It's a very, very contentious issue. And the further north you go on concessions as well, the more contentious it is. But obviously there's been, when this can come through, move forward at least from a center-left government, that tells you something about the underlying force of the ability for these things to move forward. But also it's tied in very much with the European security situation. There's been a complete shift in Norwegian mentality, as with much of Western Europe, Europe period, since the Ukraine war broke out. And I think this is just one of the fruits of that.
And obviously we've seen the US being a big winner in terms of LNG coming into Europe and so forth. But Norway also, you would say, in a sort of use of that language, but ultimately Norwegian energy has helped save the day for Europe. Does that stay bedded in regardless of the pathway forward? Does Norway have that sustainable supply opportunity for Europe?
I think this is, again, the internal political structure within Norway of the argument of the environment. I think the further away you get from war. If there are settlements, I think the environmental aspect wins out more over time, but we're not there yet. We're still in a time when security has primacy as on people's minds.
Yes, and it does unfortunately look like that hovers around for a while. The survey result disagree with the thesis. The bearish worst is not over. C'est la vie. Let's see what the rest of the world thinks of that thesis. But ultimately, Brent crude oil is trading up today, again, with some momentum from the dip on the news last weekend that OPEC was accelerating its supply increases into June, and beyond is now the general expected sentiment that OPEC Plus will bring back these 2.2 million barrels a day of cuts from the 8 countries that have participated in them, but many would argue that many of that 2.2 is already in the market because a number of those countries have been, quote unquote, cheating. So we will see where that goes. A lot to happen in the next week, obviously, as noted, with the negotiations, the China-US trade negotiations starting in Geneva. What will the mood music be out of that? And the Trump visit to the Middle East? Will there be any shift in any of these major fractures in the aftermath of his visit? We will have to see. But today, Brent crude oil trading up above $62 a barrel. And we thank our guests this morning, Jamal Qureshi in Norway with Petrologistics, Alan Gelder in the UK with Wood Mackenzie, and the one and only Sarah Akbar in Kuwait with Oilserve Kuwait. Thank you, guys. Have a great week. All the best.
Thanks, guys. Enjoy the rest of your day.
You too.
Cheers. Take care. Bye-bye.